I'm gonna show you how to get perfect trades, recognizing absorption and exhaustion of buyers and sellers, and where buyers and sellers are trapped. To measure the strength of buyers versus sellers, we are gonna use something called delta. By definition, buying absorption means that sellers are coming and the price is not moving down. Let's visualize it. So in this graph, we see that sellers are coming like this, but here they are unable to complete the sell and they are just stopping over there, and you see a few buyers coming up. The reason that this happens is because over here buyers are absorbing like crazy and they are driving the market up. So delta is something that will help us identify those specific price areas. On the other hand, selling absorption is the exact opposite. It's when buyers are coming and at a certain point, they just stop because sellers are absorbing them and they are driving the market down and dominating the market by selling off at this specific price. Now, exhaustion is a completely different thing from absorption, but by definition is when there is lack of participation of buyers and sellers, but the price keeps moving up or down depending on which exhaustion we are. If there is a buying exhaustion, let's visualize this first. So what's happening with the price is, for buying we have this scenario over here. You see the price keeps moving up, but the delta buyers don't move accordingly. They fluctuated like this. This means that there's not enough buying power to drive the market and the delta goes up and down all the time. And the price keeps going up like crazy, like nothing is happening. Selling exhaustion is the exact opposite scenario, guys. We have the price keep going down and down like this, and the delta doesn't do a significant difference. It fluctuates, but in no way this is reflecting what's happening here. Quickly, as traders, we visualized everything in our head, and I'm going to explain to you how to get delta statistics and to identify when buyers and sellers are trapped, as our candlestick charts are still formed. Here we are in our platform, and as you can see, here is white, but for me, it works better without any candlesticks, but you can add them as well if you want. But for these video purposes, I'm only gonna explain the delta statistics. As you can see here, each column is representing one candlestick, and those statistics change and only settle when the candlestick closes. Now, as mentioned before, delta measures the strength of buyers versus sellers. You can see here in this candlestick, sellers were stronger than buyers. In this candlestick, you can see that buyers were stronger. You can see here again, buyers are stronger, sellers are stronger, buyers are stronger, so on and so forth. As far as the numbers are concerned, is the contract size or lot size that is happening within the candle. This candle over here means that the sellers are stronger, but you can find this number when you do buyers minus the sellers. Here you can see that sellers were stronger over 39 lots or contracts. You can call them whatever you like. Here is contracts, but it's the same logic behind it. Also, here you can see buyers were stronger by 23, so on and so forth. Now, delta change is the difference between this candle and this candle, the difference in the strength of the previous and the current candle. As you can see here, there is a buying strength of 62 on the buying side. You can see that here is 23 and 39. You can see that the total is 62. Buyers were stronger by far in the next candle here in comparison with the sellers. You can do it by yourself and cross-check all the following numbers over here, but that's essentially the conclusion. You can do the math on your own time or pause this video to cross-check everything. The next two boxes on our delta statistics is minimum delta and maximum delta. Those two things, as the name suggests, is the maximum and minimum contract size in that specific candle. Over here, the maximum delta obtained in this candle was 6 contracts, and the minimum delta in this candle was minus 64 contracts. And that means that the sellers were much stronger than the buyers in this moment. The contracts on the maximum delta statistics box essentially represent the maximum additive market orders at any point on that specific candle, meaning it's the highest point that the maximum positive delta reached on that specific candle as it was developing. And in this example, this is 6. Now the opposite happens with the minimum delta statistics box. Is the minimum additive market orders at any point on that specific candle, which is the highest negative delta reached in that candle. And here is 64, and that represents that there was hardly any buying before the selling came in that specific candle. That's why the sellers are trapped, and that means that there is a buying opportunity for the next few candles. You can go ahead and see the next few candles over here for maximum and minimum delta and how they are formed. But in general, you can see here the maximum delta is positive and the minimum delta is positive. That means that the candle had only positive trend, and over here the same as well, but with way fewer market orders. Here was negative, here was mostly positive, but it had a combination of buying and selling power. So you can say it's just an indecision, and here the sellers are dominating as well, so on and so forth. You can see the strength of buyers and sellers as mentioned before. The most important thing to know in these statistics, here we are getting a sense that the sellers are trapped. When the sellers are trapped, for example, in this candle, the number of maximum delta is really low, almost zero, and the selling power is huge. As you can see here, is 64. This means that the sellers are trapped, and that's what you are trying to look for. And the opposite, when buyers are trapped, you are looking for a huge maximum delta over here and a little negative minimum delta here. These are the indications that the market has some trapped buyers or sellers. Now, as you can see over here, we identified when sellers are trapped. That means that there is a potential buying opportunity, and we can scroll through the next candles to see the next few columns. The buyers are slowly dominating the market, and you can see that more buyers are coming. Let's move back. The last thing on the delta statistics is the delta percentage. One of my favorite things, and you can see with a glance which side is in control at that specific candle. You can see that here sellers are in control, buyers are in control, again buyers are in control. You don't really need calculator to do the delta percentage manually, because imagine you are in the middle of very busy trades and you are pulling up a calculator to try and do the delta percentage. Guys, that's ridiculous. It doesn't work. The opportunity will be missed. The program does this for you as soon as the candle closes. So we know that here sellers are in control, so on and so forth. And then because we said that here there's a potential buying opportunity, you can see that after a few candlesticks, 36% on the buyer side, they are more dominant, 62%, 19%, 30%, 44%. They are slowly dominating the market, and buyers are actually in control of this trend, mostly trusting this when is above 25%. For example, if I need to be on the buying side and I identify this, there's need to be a minus 25%. So if everything aligns, I will definitely buy on the next candle. And the opposite, buyers trapped, this needs to be plus 25% to sell. I'm happy to witness your trading journey, so hit the like and subscribe button to continue being part of the team, and you can learn every time something new in this YouTube channel. Now, I've seen many traders use footprint candles but have absolutely zero idea how to use and read these statistics, or they know how to use them but they just don't want to share this powerful knowledge with you to complete you as traders. But as you can see, I have zero issues in sharing my knowledge for free and some specific tricks as well. Delta works better with footprint candles, and I will make them appear now for you to see how it generally looks like, and you can pause the video and check the numbers of all those candles. For now, it's really important to understand the strength of delta and what you can get when understanding these statistics and how they work. That's how you get perfect entries and exits in the market, by knowing which side is stronger at any given moment. If, for example, you want to sell and you want to get a big move, how do you know when to exit and when not? Delta helps you and gives you hints along the way on when to stop. Here, or whenever you want to stop. Delta gives you indication where sellers and buyers are strong, and how can you optimize your trade to get more money. If, for example, you know that more sellers are coming, you will stay in that movement. But if you are just looking candlesticks, you don't have enough information to know if you should enter or exit accordingly. Guys, if you are wondering how professional traders take advantage the tails of the candlesticks to get the most outcome, they are using delta statistics. They are exactly looking when to enter and when to exit and who is in control in each candlestick, buyers or sellers. And if you are wondering the same, how to take advantage of those tails over here that have huge tails in some candlesticks, you can see it with delta. For example, delta can tell you until here the sellers were strong, so there is no need to exit your position. Or for example, here buyers were weak and remained weak on that specific trend. So you have two choices: either re-entering the trend because you know that the buyers were weak, so you re-enter as a sell opportunity, or you stay in that specific trade until the sellers become weak again to exit. With a glimpse, you can see everything needed. Hit the like and subscribe button.